Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today.
Hey everyone, so doing a little reflecting back on the week and how the chart guys play earnings. We're going to look at Tesla and CMG. And how we play earnings is waiting until after the reaction to earnings, because I don't like playing coin flips. I don't like 50-50 odds. I want the odds in my favor, and I don't want to be gambling. So if you are a gambler trader, you love the earnings season and you like to place bets and you win half and you lose half. That's usually how it goes. But we like to wait until after the reaction to earnings, and then we swoop in when the odds are in our favor and trade the volatility that follows. So for CMG, the setup was very clear. And we've had CMG on the Chart Guys resident bear list is what I call it. And we've been doing a video, I've been doing a video every single night on CMG for the past at least 5 months. So I know CMG levels like the back of my hand. And the point being, it's very important to know stocks like the back of your hand. And then those levels are very clear. And when you see key resistance breaks or key support breaks, it's very clear on what to do. So here on CMG, the weekly chart, we saw a very clear descending triangle with lower highs the whole time since March and a very clear base of support down in the mid 380s, 384, 387, 386, 386, 387. So very clear support in the mid 380s and very clear lower high pattern. So we knew we were going to get a break heading into earnings. The pattern was so tight at this point that it was very easily going to be a clear bull break heading back up towards 500 or a clear bear break heading back down towards 350. And obviously we got a bear break, but my point being, the setup, knowing those key levels, we had a really nice trade opportunity looking at the 5-minute chart on CMG after earnings day. And it started out above that support line of 384. So the lowest price that we have seen in years on CMG had not broken yet. The first 5-minute candlestick of the day broke that level. There's your bearish entry signal. As soon as 384 breaks, you're in bearish. And we had a bunch of members playing this one because we're all familiar with these levels, watching these videos every night. And it was a big time pullback. You could have covered here and exited your bearish position once the 20-period 5-minute moving average became support. Or if you wanted to let it ride a little bit, we saw another leg to the downside. Point being, once 384 broke, by the low of the day, we're seeing a $20 move to the downside over 4 hours. And if you were only in on the first leg to the downside, you are seeing a $14 move to the downside. Either way, if you're playing weekly options, you're seeing big-time gains. Even if you're playing common shares, you're seeing big-time gains. So it was knowing the weekly chart levels, knowing where key support was, knowing it was a bearish reaction to earnings and just waiting for that break. As soon as that level breaks, the odds go in our favor significantly in a bearish position. Whereas if we were playing before earnings, making bullish or bearish bets, it's a 50-50 gamble because none of us have the information available to us to make a more educated decision and have the odds in our favor like it would here, just being patient and waiting. So next we have Tesla. Tesla on the daily time frame. We knew there were very, very key resistance levels. And look at this resistance, 215.67. We rejected from the 50, 100, and 200-day moving average resistance. So we have the reaction to earnings, and we can see that it is a bullish reaction. So we know we're going to start the day with some strength on Tesla. And we could see where the upper Bollinger Band, and just looking at the pre-market level, seeing that we were trading up in the 212, 213 level, we knew the upper Bollinger Band, the 100 and 200-day moving average resistances were all going to be around 211 to 213. So that's our resistance zone, and I know that if we reject there, we see a lower high on the daily time frame, and the bears remain in control, and they have been in control. Looking at the weekly time frame, we had weekly middle Bollinger Band, weekly 50-week resistance there as well. So daily and weekly moving average resistance lining up. So we were watching for a bearish entry on Tesla. And on the live webcam, I was saying time and time again, pointing out to be looking for a clear bear break. So here's that day. And I was looking for a break of the 100-period 5-minute moving average. And I picked that level out because watching the pre-market action, we bounced off that support. Right when the bell rang, we bounced off of it twice. And we clearly saw resistance up at 213.55, 213.63. I wasn't concerned with where we were seeing resistance. I was just waiting for a key break of support. So we finally lost that 100-period moving average support there. You could have made your bearish entry there. You would have had to sit through a little bit of upside, or you could wait for a clear break of the higher low pattern. So here's our low, 209.62, 209.82, 210.29, and then as soon as we break that higher low pattern, there's your bearish entry signal right here, and we just absolutely dumped for the next 2 hours, and we didn't even break exponential moving average resistance. So let's say you got in, even if you got in really late when a new low of the day broke at 209.62, then we see the bottom in at 201.65, $8 move to the downside over 2 hours. Yet another day with big time gains in weekly puts, and yet again big time gains even if you're playing just common shares. There is a drastic drop over 2 hours, and then there was a clear bullish entry when the 20 period moving average became support, and we saw another half hour of upside. So the point of the video is waiting until the reaction of earnings plays out, knowing where key historical levels of resistance and support are on the chart just by being familiar with them, looking at the charts every day, watching how the prices react to levels, and then waiting till the trading is live. Nothing, you don't have to hold overnight, no after hours action, no guessing coin flips on earnings. And that's the way to trade earnings, in my opinion, to have the odds in your favor and to be a consistent winner. So I appreciate you watching. I hope you learned something, and I hope you have a great weekend.